Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the last 12 hours, the Australian dollar did stage a brief down test, but however the momentum came back rather sharply, and now actually as we break above the 71.35 level, could actually see further gains, maybe up towards 72 cents as a potential target. With all eyes on the RBA next week, it has been forecasted that the RBA may raise interest rates from 0.1 to 0.25. In the likelihood of that could actually generate a bit of further momentum for the Australian dollar and maybe even captured around that 72.5. However, from the down test and rejecting around that 71.15 area, and the market is showing a bit more of a bias to the upside by the RSI. Let's see if these gains can continue. The downside challenge of the euro dollar still holds around 104.85.95. In light of the pattern, the dollar index, which measures the greenback strength against a basket of 6 major currencies, posted a 2-decade high of 103.92. Or more to the point, last time it was challenging these highs was back in December 2002. In light of the pattern, though, we are seeing a little bit of a momentum coming back as the US dollar has actually retreated 50 points away from those highs, around now trading at 103.50. Let's see if the market can retain its bullish bias, that is, to the euro, and look for a short-term recovery back towards the high 105 area. However, a break of 104.85 gives us a view down to 103.40.80 as a potential target. With the upside recaptured from the break of this trend line, the market for myself is neutral. However, I am keeping a very close watch in case we do see a break that is beneath this line, somewhere around 129.20.40 area, which would generate a move back down to 125. Until the break of the trend, I'd rather sit out for the moment and be neutral, but there is some bearish divergence coming from the RSI that could sway the bears to come back heavily, but we do need to see a break of this trend. In light of the pattern of the downside, the 123.80 was respected and now showing a little bit of momentum coming back as the dollar index, as I mentioned earlier, has slightly pulled away from the 20-year highs. Let's see if the sterling can actually take a challenge back towards that 125.5 to 126. Sterling Kiwi, however, still a little bit mixed as it's recently rebounded from that 191. However, in light of this pattern here, the market is a little bit weaker into the European session, so we may see a small pullback, but I do expect to see 191 figure 20 area to stage a bounce and maybe even come back towards that top side of 192. A strong rejection from 1,878 was seen overnight, and therefore the market's finding a little bit more momentum that could take us back towards the region of 1,914 and reassess from there, as a rejection from there would put us back on track towards 1,878 and reassess. And oil pushing further to that top side since the rejection of 97, but should find a resistance somewhere around 105.40.60, and if so, then I do expect to see a pullback back to this bottom side of the range around 97.40.80. Well, that wraps it for the week. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.